Welcome to another stage analysis video. It's Sunday the 25th of February 2024. I'm going to start off today's video with a look through some of the week's significant bars before getting into some of the watch list stocks and then some of the more regular content, looking at the industry group relative strengths, the bell curve and market breadth, and finishing off with a look at what's going on with the major indexes. So apologies for the sound quality. I'm still stuck in a different room at the moment as my standing desk continues to be broken at the moment, waiting for a replacement part. So the sound quality is not as good in this room, so a lot more echo unfortunately. So hopefully it won't be too bad. Okay, getting on with this. Let's start with, I'm going to have a look at Carvana, so CVNA. This has come up in the watch list recently. We had an earnings gap move, so you can see on the weekly chart. If we flick through to the daily quickly, you can see gapped up on Friday, been making a inverse head and shoulders type pattern for a little while now, so consolidating around the above and below the 50-day moving average before following through on some stronger volume on Friday here on earnings. You can see it was a squat candle but still gapped up over 32.09%, so massive day for it there. If we go back to the weekly chart, you can see that pattern that's developed as a stage 3 range over the course of the last 6 to 8 months or so here. So it did make an initial stage 2 breakout through this area, this lower area, into some overhead resistance. This was a relatively small stage 1 base. It had a sharp V bottom back towards its 30-week moving average before starting to develop a tighter range structure through this area. So you can see this more smaller structure before then starting to pivot out through this area. 30-week moving average started to turn up, so started to move through early stage 2, but then started to consolidate, dip back below its 10-week moving average and pulled all the way back into that rising 30-week moving average. So started to develop some stage 3 tendencies, but formed this cup and handle, inverse head and shoulders, whatever way you want to look at it. Started to tighten up again, making higher lows, some higher highs, and has finally now pushed back out to new 52-week highs again on a little bit stronger volume, not significantly stronger, a little bit stronger, about 2 times the 4-week average here roughly. So starting to look like it's moving back into stage 2 again, but at the moment still what we call an attempt. So until a lot of breakouts can immediately fail and come back in and turn into up thrusts. So we initially label them an attempt until they're more established. So in a moment, looking for this to pull out, start to push its way back up and start to move through that 100 level and potentially higher again. So you can see after it had an extremely steep stage 4 decline. If we stick a Ichimoku cloud on this, where are we? I'm going to grab one from here. So just the cloud, not the full Ichimoku, just to see where the resistance zone was. So that V-type bottom rallied up into the old resistances. When you get a steep stage 4 decline like this over more than a year, then generally you need a lot more time of basing. And in this case, we've had what we call a higher base. So although these kind of structures, you tend to get a sideways range for a long time, it starts to build in the lower part. But in this case, because it had a strong volume thrust into stage 2, we've actually developed a higher range, which has turned into a stage 3 and now a new stage 2 continuation. So clear of that older resistance, so looking for this to make a continuation. Let's have a look at Square as well, or Block as it's called now. So SQ still on the ticker as well, still call it Square. So we actually annotated this one already, but there is actually 2 base structures in this one. Someone actually did ask me about this. So in terms of the Wyckoff structures here, you can see labeled this as the selling climax and the automatic rally and the secondary test. But initially, if we unlabel this, I'll just clear out these markings, come back into it. So yes, so you can see we initially had rebound through this area, then another here, and then we had this, it got back closer to the 30-week moving average. You can see at this point here it was still a long way from the 30-week moving average, still a long way from the 30-week moving average. So this here is what we call a change of behavior, starting to a potential change of character. So a potential early selling climax, and then automatic rally, and then some kind of secondary test. But it did start to roll over through here. So we draw our initial structure through this area here, as you can see, and this was the initial base, so we did have a sign of weakness through here, and then pulled up again. It couldn't get back up to the highs again, so there was no up thrusts out of the top of the range. So in a typical accumulation base structure, you get thrusts up and out of the range multiple times, and obviously on the downside as well turns into springs, so up thrusts and shakeouts. In this case you didn't get that on that, so that's another sign of weakness with the lower highs through here. So it did actually form after breaking down from that area, made another continuation breakdown for a few months back into stage 4 again, before making this massive shakeout move and pulling back in again. So this is what we call a terminal shakeout, and hence what we look for is there's actually a lower structure in here. So from this secondary move, when that initial sign of weakness was through this area here, this point through here can potentially become the lower end of your structure. Your automatic rally, you can see we got back above the 30-week moving average briefly there, and then a secondary test type area. So if we start to draw a structure through this area instead, you can see the majority of the price action over the course of the last year and a half has actually been within this area, even though we've had up thrusts at the top and we've had a shakeout at the lower end. But in terms of the broader price action, it's been within this structure, not the higher structure as such. So both equally valid, but in terms of looking for our significant levels, we look for levels that have been tested multiple times. So you can see through here there's 3 or 4 tests of this upper level through here, so hence this zone through here becomes our potential stage 2 breakout level as such. So again, drawing that rectangular structure across just gives you a clearer view of that. So at the moment, looking for it to clear above 80 significantly, and then that potentially could be a stage 2 breakout. Technically might just be a stage 2 breakout already. If we look at it on the daily chart again here, you can see it's well above the 200-day moving average, but both of these highs have formed above that, and it couldn't manage to close above that. So at the moment, just on the borderline still. Go back to the weekly chart on this, so looking for it to clear this level more convincingly, and then that could potentially be your stage 2 breakout. So borderline case at the moment, but I'd still put it in late stage 1 or phase 1, stage 1 phase D as it's called. So the later part of the structure, as you've got your phase C into your phase D area at the moment. So looking for a sign of strength, some kind of backup, and then push its way up and out and through back into stage 2 once more. So if we look at this again, you can add a Ichimoku cloud just to look and see where that resistance zone had formed. Find it useful at times, especially on the earlier moves. A lot of people, when they're new to stage analysis, they see a stage 4 decline, they see a move up, and they immediately want to get into this kind of area here, the early stage 2 breakout, which often turns into an up thrust. You can see there's still a lot of overhead resistance at that point through there, and there's obviously the major resistance zone from this time-based resistance where people are still trapped in their positions from the stage 4 decline. So the early stage 2 breakout often fails, especially when it's still under heavy resistance. So if you're looking for stocks and it's had a big decline, it's only had a small base and starting to break out, then this has got much more chance of failure than something with a stronger base structure. At this point now, there's much more chance of this being able to push up and out because there's much less overhead resistance at this point. So just something to consider, as it's often a beginner mistake with the stage analysis method. I've seen it a lot.